My name remains Abolade Hadekola. Everybody calls me the King Maker. So if you have just joined us, you're welcome to class. So if you can hear me, everybody, if I am audible enough, you can hear me loud and clear, please type in yes in the chat. Let me know if you can hear me loud and clear. Type in yes in the chat if you can hear me loud and clear. All right, so I'm expecting everybody to put in, to type in something in the chat. If you can hear me very well, please type in yes in the chat. If I am audible enough, type in yes in the chat. Okay, that is fine. That's great. I'm so happy to be with you guys today. So happy. I'm super elated, super delighted to be with you guys. I'm super elated, and today's class is really going to be amazing. I shared a few minutes ago that I am going to be sharing one of the strategies we use to make money with you guys in this class, all right? So you can have opportunity to start using the same strategy after going through this the 3 days training video again, all right? So before we do 5 to 10 minutes recap on what we learned yesterday, guys, quick question. If you were in class yesterday, please type in 1. If you attended yesterday's class, please type in 1 in the chat. If you did not attend, type in 2 in the chat. If you attend, okay, those of you who attended yesterday's class, please put in 1 in the chat. If you did not attend, type in 2. I expect everybody to put in something in the chat. Is either you type in 1 or 2. You were in the class yesterday, put in 1. You were not there, put in 2. Okay, all right. So my quick question to those of you who were in class yesterday is that, were you able to go through the link I sent to you guys concerning PIP calculation? Were you able to go through the video? Because it's a very absolutely important video for you to watch. If you had not watched that video, you cannot do anything. You won't be able to trade effectively, because you need to know how to calculate pips. Okay, you need to know how to calculate stop loss and take profits. And the link I sent to you, I gave to you guys yesterday, has all the details in it. So I believe that is going to help you. That was the reason why I had to look for that link to drop it for you guys. All right. So I'm sure what you learned, once you learn through the link, is very clear to you guys. Right. So if you have any question concerning that, you may put it in the chat. Then we can take a look at it before we go into this class. All right. But for those of you who have not gone through the link, if you are still new and you don't know how to calculate pips, you need to go and watch the video. Okay. We have a simplified explanation that even a layman will understand how to calculate it. All right. So quickly go and get it done. Go and watch it. So before we go into today's class, let's quickly run a quick recap of what we learned yesterday. Okay. Yesterday, we talked about Forex basics. I shared with you the 8 most common currency symbols and their uh, short letter code. Okay. EUR for euro, USD, US dollars, and every other thing, as you can see right in front of you. So the symbols you see right here, the 3-letter code, represent each of the currencies. So you need to get yourself familiarized with this, those of you who are new to trading. All right. So we shared up, we talked a lot about this. I'm sure this is very, very clear to you guys. Just discuss about currency exchange. I made it clear to you yesterday that the first, in any currency pair, the first currency at the left hand side is known as the base. Okay, why this, the second currency at the right hand side is known as the quote currency. And I shared with you that at any point in time you want to buy or sell a pair, just like you are looking at the euro versus USD. At any point in time that you want to buy or sell a pair, you are dealing with the base currency, which is this currency, the euro in this case. All right, you are dealing with the base currency. And remember, the base currency is always one, always has one value. Okay, which means 1 euro is equivalent to 1.3505 if you are to exchange this to US dollars. So we also talk about, we also talk about bid price and ask price, and I'm sure this part is very, very clear to every one of you. Okay, I'm double sure this part is very, very clear to every one of you, because the bid price, and the ask price, uh these are the prices you will be working with. Okay, these are the prices you will be working with. We also talked about sorry guys, few seconds. Few seconds, guys. Something is mixing up, so I need to just freeze time. Okay, better right. So we also talked about spread. Okay, I shared with you that spread is the difference between ask and price, which means ask price and bid price can never be the same thing. Okay, it can never ever be the same price. There will be slight difference between the two, between the ask and the bid and the ask price. So the difference between the two prices is called spread. Okay, and this is where the brokers make makes their money. Okay, this is where they earn commission for the service they are rendering to you and I as a trader. We also talk about pips. Pips, the price interest point. It is the smallest value of any given forex code. Okay, which means the pips is the fourth decimal place of every currency pair that has to do without the JPY. Okay, which means the non-JPY pairs, the fourth decimal number is known as the pip. But for all the pairs that has Japanese yen pair, the second decimal number is known as the pip. I shared a lot of details about this yesterday. This is just a recap, guys, just to refresh your memory on what we've learned. All right. So take profits, trading orders. We talked about take profits and stop loss. Take profit. This is an order a broker to take your trade out in profit once your profit gets to a certain level. Okay, it is an automatic order to execute on your behalf while you are not there, while you are not in front of your trade. All right, and the opposite is the stop loss is the opposite. The stop loss is the opposite. Sorry, guys. So the stop loss is just the opposite of take profit. Okay, because there is no way you will not record a loss in the forex market and in any online trading. There's no way. Even the very best trader in the world, we have a period where he or she will lose constantly or consistently. But overall, you have to come out profitable. So this stop loss protects you and it protects your trading capital. All right, it cuts your loss short so that you can have the opportunity to come back and trade. I hope this is very clear, guys. So we also talked about lot size. This was not so clear to a lot of people yesterday, but I'm going to use a few minutes to try and re-explain this just under 2 minutes. I'm not going to stay long on here because we have a lot of things to cover today. So lot size is the quantity of a trade you want to buy at any given point in time, and your capital and the percentage of your capital you want to risk on that particular trade will determine the lot size you want to use. So if you have like $200 account, you don't want to risk more than 2% of your account on a single trade. So the 2% of $200, which is about $2, that will determine the number of lot size you want to use, and that has to do with your stop loss. Okay, because there's a way you have to calculate it to merge it up with your stop loss that will give you the actual lot size you have to use. But to simplify the whole process for you guys, to make it really, really simple, for those of you who have $100 in your account, every trade you want to take will be 0.01, because I shared with you that we have standard lots, we have micro lots. All right. So every trade you want to take with $100, if you have $100 in your account, you don't want to trade more than 0.01. So if you have $200, trade with 0.02. How this is clear. $300 is 0.03. So on and on like that in multiple of 100. I hope this is clear. In multiple of 100. So this is one way about money management. Okay, but this is not the best way of money management, but it is still money management. All right, beginners money management, let me put it that way. So with this, your account will be secured to an extent, but I shared with you that you must not go in a trade without a stop loss. Okay, because stop loss will protect you at any given point. So you must take note of all these things. So you have to go back to yesterday's class and rewatch it, guys. For better understanding, rewatch it like one or twice for better understanding. So this is where we stopped yesterday, how to calculate profit in Forex. How to calculate profit in Forex. So the number of pips you are going to make will determine how much you are going to, the number of pips you make will determine how much you are going to make per pip. And I shared with you yesterday that the dollar value per pip per standard lot is $10. Okay, and for lots, it is $1. And for micro lots, it is cent 10 cents. All right. So you don't have to bother yourself with all this. The brokers will do it automatically. So it has been programmed. So any number of pips you make, you continue to see your money growing in profit, or as you are recording some loss, you see it going down, on and on like that. Okay. So today, this is where we're gonna start today. So sorry guys, I'm still with you. So today we'll be starting with how to profit from Forex moves. It is highly important we do a recap because where we stopped yesterday, this is the continuation from where we stopped yesterday. All right. So it is very, very important we do a quick recap so that we can continue from where we stopped. So today we'll be looking at how to profit from Forex moves. How to profit. How can we make profit from Forex moves? This is a very simple process, guys. It's a very simple process, guys. Now, in the Forex market, when we say going long means we are buying. Okay? Going long means we are buying. Now, for example, based on the Euro USD, we use as an example yesterday, we had 1.3505 yesterday, but this is a different thing entirely. Okay, but this is just to be able to explain to you how you can make money with the move. All right. So when we say we want to go long on Euro USD, it means we want to buy Euro USD. So let's, for example, we want to go long on Euro USD on one standard contract at Euro USD 1.3510. It means we want to buy one standard lot of Euro USD at this rate. All right, at this rate. We want to buy one standard lot. Now, this is it. Let's say we buy Euro USD. Okay. I said yesterday that it is not possible to buy Euro USD. We cannot buy Euro USD. We can only buy the pair. But the common word buy a pair and a pair. For example, Euro USD, it's common. Okay. Buying Euro USD, buying GBP USD, buy AUD USD. So it's common like that in the Forex market. Okay. In the Forex industry, let me put it that way. So you can only buy Euro. You cannot buy Euro and buy USD at a time. Okay. But the general saying in the Forex industry is that I want to buy Euro USD. We want to buy Euro USD. So that is the general one. All right. So don't get it twisted. Don't get confused. All right. So let's say we want to go long on Euro USD. We want to buy Euro USD pair. We want to buy Euro USD pair. So let's say we buy the pair at 1.3510. We buy. Now, if we buy, let's say we buy at this level. We buy at this level 1.3510. Remember, we are saying the pair should go up. We are saying the pair should rise, which means we are saying Euro is going to go stronger than US dollars. So after a while, let's say after 3 hours, after 4 hours, the pair moved, 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 and it got to a point. You get to a point, you decide to close your trade. You decide to close your trade, or it gets to your take profit. So let's say you close it at 1.3550. Now look at, guys, this is where you entered from, right? And after a while, price has moved up to this level. Okay, the difference between this place and this place, this number and this number, that is your profit. That is the number of pips you have made. All right, somebody said I'm not audible. Everybody, please put that in the chat. Can you hear me clearly? Can you hear me clearly? I think I'm on top of my voice right now. Please, guys, do me the favor. Let me know. Let me know. Everybody, I want you to put in your comment in the chat. Am I audible enough? Is it not good enough? Let me know if I'm audible enough. Is it what is no? Be clear. Because somebody said not good. Okay, but I'm on top of my voice, guys. Okay. Maybe I can just readjust and move closer to my system a little bit. Maybe you need to adjust your volume or something. Maybe you need to adjust your volume because I believe I'm on top of my voice, guys. So let me know if it is okay right now. Somebody said I can hear. So everybody, please, we check. The goal and point is just to be able for you guys to hear me clearly and understand what I'm sharing with you. So if you can't hear me very well, it means if you can't hear me very well, then it means we are not communicating. My audio is fine. My audio is fine based on what I'm seeing right here. My audio is fine. So you need to check it at your end. So for the last time, everybody, please put it in the chat. If you can hear me very well, type in yes. If you cannot hear me very well, type in no. If you can hear me very well, type in yes. If you cannot hear me very well, type in no. Type yes in the chat if you can hear me very well. Type no in the chat if you cannot hear me. Okay, I think I'm good now. All right. Okay. I think to me, I think I'm on top of my voice. So it may be your internet or something, because I'm double sure my internet is fine, right? Because I make sure I check it very well before I come on. So anything can happen along the line anyway. But okay, but the goal is that you guys can hear me right now. So let's keep moving without wasting much of our time. So guys, as I was explaining, the difference between this number is the number of pips you make. So you want to take away, remember, you bought at this level, okay? You bought at this level, So and price has gone up to this level. Since it has gone up to this level, the difference is the pip you have made. All right. So you want to take away the number of your entry. This is your entry. This is your entry, right? This is your entry. So you want to take away your entry from your exit price. You take away your entry price from your exit price because you are buying. So in this case, look at 1.35 is what we buy at, and 1.3550 is what we sell at. All right, because this is where we sell. We sell it. Remember, we bought it at the low. We sell it when it went high. All right. So this is the selling price. So you want to take away the buying price from the selling price. All right. So you have 3350, which is your selling price, minus 3510 equals 40 pips. So 40 pips is the difference between this and this, between your entry price and your exit price. Okay, between your buying price and your selling price. And one thing in Forex, sorry about that. One thing in Forex and online trading is that when you buy, you go into a trade, it is 100% compulsory for you to also sell to close the trade. So you open a trade by buying it. It is 100% a must for you to close the trade or to sell it to complete that trade round trip. You open something, eventually you must close it back. So if you buy a trade right here, you enter into a trade by buying it, it will get to a point where you want to take your profit. Obviously, you cannot leave the trade to keep running forever. You will want to take your profit. So once you take your profit, either you close the trade manually or it gets to your take profit. Either of the two. It means you have sold, which means you have completed that trading cycle. I hope you're getting this. So when you open a trade, it is a must for you to close it. So, and likewise, when you sell, okay, when you sell, you are predicting that market should come down. So once it gets to a level where you want to take your profit, once your profit is taken, it means you have closed the trade. So you cannot leave a trade open forever. So you will close it to bank in your profit, or you close it in loss. Either of the two. Either you close in profit or you close in loss. I hope this is clear, guys. So I need to clear this. So let's keep moving because of our time. Okay, thank you so much. You guys can hear me. I think I had to put in more voice. My voice is cracking. I've had just one class today, so my voice has not been good since yesterday night. Let me just put it that way. So let's keep moving, guys. So with this now, sorry guys. So let's keep moving. So the profit with this move is that profit is equals number of pips. Remember, this is the number of pips, 40 pips, multiplied by dollar value per pip per standard lot. Okay, in this case, our example is one standard lot. Remember, don't forget we have mini lots. Don't forget we have micro lots. But in this example, we have used standard lots. And dollar value per pip, okay, the worth of a pip per standard lot is $10. The worth, okay, how much does a pip worth? $10. And that is for a standard lot, all right? So the number of pips you have made, which is this 40 pips, multiplied by dollar value per pip, which is $10, all right? Multiplied by number of lots, In this case, one lot. Okay, depending on your account size, you can trade 2 lots, you can trade 3 lots, you can trade 4, 5, 6, 7, 8, 9, 10, 15 lots, 20 lots. But for you to be able to trade 20 lots, then it means you have like $50,000. Okay, so one standard lot is what we have in this example. So in this case, the 40 pips we have made the move between this level after you have entered, you have bought, and it went high in 40 pips. You close in 40 pips. So this is the 40 pips. Multiply by $10, 10 US dollars, dollar value per pip. Okay, a pip worth $10, and this is the $10. One pip worth $10. This is the $10. Okay, multiply by 1, which is 1 standard lot. So if you trade 2 standard lots, it is going to be 2. If you trade 3 standard lots, this is going to be 3. So 40 times 10 multiplied by 1 equals $400. So with this move alone, if you have traded 1 standard lot, you have made $400. I hope this is clear, guys. All these brokers will calculate them for you. Do not worry. You don't have to go through this rigorous thinking and everything. But it is very, very important for you to know how this works, so that you can be sure you know exactly what you are doing. So if anything goes wrong, you will be able to rise up against it. I hope this is clear, guys. So let's keep moving. So now another way of looking at this is that, let's for example, you buy euro and pay 135,100. Now look at this, guys. Don't get it twisted. Remember, euro is the base currency. Euro is the base currency, and every base currency stands for 1. Okay, 1 represents every base currency, and that 1 is 100,000 units. So this is the units you are talking about. Don't start thinking, how do we get this 100,000 again? I've explained this yesterday. So 1 euro, one base currency. Euro, the base currency is the one at the left hand side, the first currency. So one base currency is 100,000 units. So you're buying 100,000 units, which means 100,000 with US dollars. So for you to, if you are giving 100,000, then you are receiving 135,100 in this case. So if you multiply this by 100,000, this is what is going to give you. If you remember, this is just 1, okay, not 100,000 units. This price is just for just 1, ONE, 1. It is just for 1, and this is 100,000 units. Okay, so this now 100,000 multiplied by this is going to give you this. All right, so if you are paying 100, let's say for example you have 100,000 euros in your hand, you hold 100,000 euro in cash in your hand. If you want to exchange all the 100,000 euro, you want to give it to probably the bureau de change, you want to give the 100,000 euro to them, they are going to give you, okay, before you can make any exchange, you will ask them, how much do you people buy, how much do you sell? Let's say that's okay, they tell you that we buy at this price. We buy one euro at this price. So you are giving them 100,000. They are going to multiply your 100,000 euro with 1 with 1.35 10. Okay, remember this, you have been told they buy 1 euro at 1.3510, and now you want to exchange 100,000. So obviously you are going to multiply this 100,000 with this. So this what you are going to get is going to be 135,100 US dollars in exchange for your 100,000 euro. I hope this explanation is clear, guys. So now, let's say you buy euro with you buy 100,000 euro and pay $135,000, and later after a while, with that euro, you feel that okay, price has gone up. Price has gone up. It has really gone up to a level that you can take your profit. So now you now sell it back to receive your 135,100 euro. So after you sold it back, you now receive 135,500. So now the difference is this: when you take this away from this, it's going to give you $400. When you take this away from this one away from this one, 135,100 minus 135,500 is going to give you $400. And now look at this simple explanation. Look at this box right here. Here you pay 1,000, you pay 100,000. No, sorry, you receive 100,000, which is plus. You receive 100,000. You pay 135,100. After a while, you give back the 100,000 euro. I don't know if you guys are guessing this. After a while, you give back that 100,000 euro, and you collected 135,500 back in US dollars. So the difference is $400. So this explanation is the same thing as this. This is just another way to explain it. This is it again. You as a trader, you want to get 100,000 euro, right? You need euro, but you have dollars with you. Now, you go to a bureau de change. I need 100,000 euro. Bureau de change tells you that, okay, the exchange rate is 1.3510 for each one. Now, they give you 100,000 euro plus 100,000 euro, which means you collected that 100,000 euro and had it in your own pocket. And from your pocket, now give $135,100 because you have dollars in your pocket. You now give that dollar of 135,100 to the bureau de change, okay? Which means 135,000 is minus from your own pocket. So you have made a transaction right there. So after a while, you feel that, okay, let me go and get my 100 euro back. I need my 100 euro. You now go back to the bureau de change. You now tell the bureau de change, come on, give me back my 100 euro. I am going to give you back your money. And after that time, price has gone up. Price has gone up. Remember, you collected 100,000 euro. So you are returning back the same value of 100,000 euro. Because price has gone up, bureau de change will now give you 135,500 back into your own portfolio. So by doing this return trading, it means there is a difference between the opening price and the closing price. This is the opening price and this is the closing price. Remember, your 100,000 euros still remains the same value. So the difference between the opening price right here and the closing price is $400. So you have made $400 profit. So you can see total profit earned $400. So a lot of you may have been thinking, wow, I have to make $135,000 transaction and just make $400. That is too small. Yes, guys, it will be too small without leverage. It will be too small. In fact, we wouldn't call it a business without leverage. We will not call it a business. Risking $135,000 to make 400, that will be very, very, very small. So there is something we call leverage. So without leverage, you will have to invest 135,100 to earn 400 US dollars. And look at the return, 0.29% return. That is very, very poor. So forex brokers across the world allows you to leverage. What is leverage? We are still going to get to that level. All right, I'm going to talk about leverage in this class, in today's class. All right, so leverage gives you the opportunity to buy more. All right, leverage gives you the opportunity to buy more. If brokers allow leverage of 1 to 1 to 1, sorry, 1 to 2, 1 to 20, 1 to 100, 1 to 200, 1 to 500, 1 to 1,000. Even there are some brokers that allows 1 to 2,000. But the maximum leverage I advise all my students to take is 1 to 500. So you don't want to over leverage. So leverage is like they are giving you some, you are dropping something small to control something big. Drop 1 naira as a collateral to control 100 naira. Drop 1 naira as a collateral to control 100 naira worth of trades. All right. So let's keep moving. If we employ leverage of 1 to 20, we just need to invest a margin of $6,755. Okay, which is just 5% of the position size. So our return becomes 400 divided by 6,755, which means it's 5%. So now I will explain something. Because brokers has given the opportunity to leverage more, using leverage of 1 to 20 is very, very small. Okay, it is those who have huge amount of money, like $20,000 and above, that can rely on using 1 to 120. So a retail trader like you and I, you want to go for minimum 1 to 500. So now let's use 1 to 100 as an example. The leverage means that drop little, drop a certain percentage of money and control something big. So in the leverage of 1 to 100, if you want to control 100,000 units, which means with this 100,000 euro, so your deposits to control this value will be 1% of 100,000. Okay, 1 to 100. So it's going to be 1% of 100,000. So what is 1%? 1% of 100,000, which is 1,000. Which is you need $1,000 for you to be able to control this. $1,000 to be in your account for you to be able to control this, because it is just 1% of your trading capital. So if it is 1 to 500, it means you have to divide it accordingly. I hope this is getting clear to you guys. It's really, really important you know this. Okay, but trust me, as a journey, you don't even want to think about this. But it's important you learn this from the beginning, because you get to a level where you wouldn't even want to think about this. So you as a trader, if you be asked and you don't know, then it sucks. It means you don't have complete knowledge. All right, you get to a stage where you don't even want to think about this. All right, because everything is automatic. It's being calculated, readjusted by broker and all of that. Okay, yours is just to know what you are doing in terms of taking trade as you're opening account, know the leverage to select, know the actual lot size you want to enter into a trade. All right, know the actual lot size you want to put according to your risk management and your capital. All right, okay, because risk management goes along with your capital. So guys, let me know any question in the chat. Do we have any question in the chat based on this? Let me know if you have any question based on how to profit from Forex moves. But believe me, for those of you who are new, Forex is not something you can get to know in one day. It is not possible. Nobody can teach if you are totally new. Nobody, even if you have been into the business for some times. Let's say you've been introduced to the business. There are some things that will keep revealing itself to you time to time as you read more or learn more about it. That is how it works. I hope you understand. But the goal is just to be able to explain it to you that you'll be able to assimilate it and understand part of it. Okay? So that as you keep journeying and you keep coming across the same thing, it will keep uh, making sense to you and revealing itself to you more and more. I hope this is clear, guys. So let me know if there's any question in the chat. So we are still moving from how to profit from the move. Continue with it. So now let's talk about going short. This is the opposite side of going long. So going long means buy. Going short means sell. Going short means sell. So in this case, we want to talk about going short, which means we want to talk about selling. All right? We want to talk about selling. So in this case, one going short Euro USD, one standard lot contract at 1.3560. Okay, it means you are buying one standard lot, which means that is 100,000 units. 100,000 units at 1.3560 per one. Remember, per one. One standard lot is always 100,000 units of the base currency. I keep repeating this, guys. 100,000 units is always one standard lot of the base currency. And which one of the two is the base currency? The first currency at the left hand side. All right, I hope this is clear. So now let's say this. You have I think something is missing. Few seconds, guys. Few seconds. Okay, so let's keep moving. I was thinking something is mixing up, but it's not. It's not. Nothing is mixing up. Okay, so let's say you're going short. All right. So you sell. You're going short. You sell Euro USD. Okay, which is the normal word in the forex industry. So but now you sell Euro USD pair. You sell Euro USD pair at 1.3506. All right. Remember, this time you are saying the pair should go down. Okay, you sold at 1.33560. But once you sell, you are saying the pair should go down. You are saying the pair should go down. So this is your entry price. All right, entry price, ET. We call it ET, entry price. 1.3560 is your entry price, which is the price you have sold. All right. Now, after a while, price has moved down. Remember, you cannot continue selling. You have sold this pair. You cannot continue selling because it will get to a point where you will want to bank in your profits. At least the purpose of trading is to be able to make profit. So it will get to a level where you will be contented with your profit, or where you will put in your take profit and say, once price gets to this level, I want to take my profit. I want to get out of the market in profit. So you are automatically closing that trade, either manually or automatically. You are buying it back. So if you sell, you will definitely buy back. Remember, you have sold here, so here you will buy the position back. You will buy the position back to make it a complete round trip. Now I will use a shop owner as an example. You, as a shop owner, you own a supermarket. For you to have a supermarket, you will definitely go and buy something from a company, right? You go and buy a goods from a company. Remember, you bought from a company. And now, after you have resold it back into the retailer or anyone else, you can see the trip has been completed. You bought it and you sold it out. You bought it from a company and you sold it out. So you can see it's a round trip there. So you cannot buy it and keep it to yourself because you want to make money. You have to sell it out in profit. I hope this is making some sense, guys. You buy it from a company. The purpose of buying it is just for you to be able to make profit. So as you bought it from the company, you cannot keep it to yourself. You have to sell it out back. So the same way with forex. So you have sold. As you have sold, so you have to buy the same position back. So let's say you now buy the same position back at 1.3520. Okay, so you have bought, open the position. So sorry, you sold by opening the position and bought it back. Sorry, you buy it back at this price to close the position. So the difference between this number and this number is the pip amount you have made. So you are going to take this away from this. So the difference is just 40 pips, as you can see. Guys, I hope this is clear. If this simple action is clear to you, please type in clear in the chat. If it is clear to you, type in clear in the chat. I want to know, guys. I want to know if this is clear. Please type in clear in the chat. I want to know. Everybody, especially those of you who are totally new to Forex. If this is clear in the chat, type in clear in the chat. All right, HBM, you're welcome. Looking forward to see you in class today. All right. Okay, so it's as simple as that. That is how Forex works. You buy something and you're going to sell it back. You sold it and you're going to buy it back to make it a round trip. So you cannot go into a trip without returning. All right. So you go into a trip, then you will definitely come back the same way it happens here in Forex. I hope this is clear, guys. So now let's keep moving. I'm going to be a little bit faster so you guys can be able to cover up everything you have to do today. So with this, once you take this value, which is the price you bought it at, you sold it, then you take it, this is the price you sold, and you take this price which you bought it back away from this, then it's going to give you 40 pips. So the 40 pips is your profit. Okay, so this is the profit. The same way we calculated the last time. So we're going to use the same method right here. But remember, that is going long, this is going short. This is selling, that is buying. All right. So number of pips multiplied by dollar value per pip per standard lot multiplied by lot number. So it means you have gotten 40 pips times dollar value per pip. Remember, for standard lot, I repeat again, the dollar value per pip per standard lot is $10. You make one, once you are trading with one standard lot, you make one pip, that is $10. All right. So now in this case, because one pip is $10, that is why we have $10 here. If you are trading with mini lots, okay, mini lots, that's going to be $1. So here we will have $1. We have $1 right here if you are trading mini lots. But in this example, we are trading with one standard lot, which is 1. So it means the value of each pip is $10. So 40 pips, which is the pips right here we've made, multiplied by $10, multiplied by one lot. I explained earlier on, the number of lots you are trading is what's going to appear here. If you are trading 2 lots, this one is going to be 2. If you are trading 3, it's going to be 3. I hope you understand. And if you are trading 0 points, if you are trading mini lots, it's going to be 40 pips. 40 pips multiplied by $1 multiplied by 0.1. All right. So when you multiply this, you see that you get $4. Okay, you get $4 as your profit because you should be divided by 10. I hope this is clear. So if you are trading 0.2 mini lots, then this is going to be $8 when you multiply this. Okay, it's just to explain this for you guys to understand. Brokers will do all this, so let me just move a little bit faster. All right, because I still have one important thing to share with you guys, which is also the strategy. So the same I explained this earlier on. When you sell 100,000 euro and receive 135,600, and you buy the position back, okay, which means you buy 100,000 euro, you buy it back and pay 135,000. The difference is just $400. This one is just to simplify this, right? So we have explained this earlier on. I believe this is very, very clear to you guys, right? But for those of you who are new, it may look somehow, but trust me, it's going to make a lot of sense to you later on. So now let's talk about power of leverage. Power of leverage. See guys, without leverage, it wouldn't be possible for you and I to trade in the forex market. In fact, let me say it will be very, very difficult, not impossible. It will be very, very difficult because leverage gives you and I the opportunity to have to trade small money. All right. So what is leverage? Margin is also known as leverage. Margin versus leverage. So it's an amount of money required to keep a trade open. All right. Now, let's say, I will explain this better. It is not the transaction cost. Remember, just an amount set aside as a deposit. Now, explained earlier on, for you to, if you are using a leverage, which is something you have to, okay. So for you to have a trade, let's say you want to have one standard lot open, there must be an amount for you to put aside as a deposit. So this money, the broker will take it away from your capital. All right. Let's, for example, you have $1,000. You have $1,000 in your trading capital, and you have taken one standard lot. Now, let's say for you to keep this one standard lot open, let's say you need, for example, let's say you need $50. Let's say you need $50 to keep the one standard lot open. So this $50, the broker will take it away from your account. Okay, the broker will remove it from your account. You will still be seeing the money right from your account, but it will be deducted away from this 1,000. So you will have 950 available. So this 950, if you want to take another trade, the deposit will be taken away from this 950 on and on. If you want to trade, let's say you want to take another one standard loss trade, another $50 will be taken away from this trade, just to keep as a deposit, just to keep that trade open. So if you lose that trade, you will lose the $50. I don't know if you are getting me. If you lose that trade, if that trade should go against you, you will lose $50. So if you win that trade, if that trade should get to your predefined take profit, or you close it manually, the $50 will return back to your account plus the profit. Guys, I don't know if you're following me. Somebody said, please repeat. Yes, I'm going to do that. That's the reason why we are here. Okay. Leverage. This is how it works. Leverage gives you and I an opportunity to drop something little to control something big. Right? It gives you and I an opportunity to drop a small amount to trade with big amounts. Now, let me use this example right here. We want to, okay, let's follow this example that I have in this chart. If you choose a leverage of 1 to 1,000, okay, if you choose a leverage of 1 to 1,000 and you wish to trade Euro USD with volume of one lot. Now remember, one lot is equal to 100,000 euro. Don't forget, 100,000 euro, which is what you have here. One lot is equal to 100,000 euro. So instead of having to provide the full 100,000 euro, you will only need 1% of 1,000, which means you will only need 1% of this amount, 1% of 100,000 as your collateral to keep that open, because they have given you the power, the opportunity through the leverage to trade a big amount and deposit a small amount. So it means you want to trade one standard lot, which is 100,000. So you will now divide that 100,000 by 1, then multiply by 100,000 euro. So this is the 100, this is your leverage, 1 to 1,000, multiply by 100,000 euro. I don't know if you are following this. 1% of 1,000 divided by 1,000 multiplied by 100,000 euro, which is the lot size. Okay, which is the unit of the lot size. Remember, the unit of the lot size is 100,000. So because you are choosing 1 to 1,000, it means you want to deposit 1% of 1,000. 1% of 100,000 euro is what you must deposit to be able to trade one lot according to 1 to 1,000 leverage. So 1 divided by 1,000 leverage multiplied by 100,000 euro, which is 100,000 units, which is the lot, equals 100 euro. So it means you have to deposit 100 euro. Okay, 100 euro to be able to trade 100,000 euro. So if you deposit 100 euro, you'll be able to trade this conveniently. Any move that happens in your favor after the trade is being opened, the profit is what you're going to get back into your trading account. So you will see, based on the series expansion we've made in the past, this small move that is going to happen within this 100,000 units may give you like $400 in 40 pips, just like we explained earlier on. If you have just like 40 pips, it means you have made $400, which is times 4 of your deposit. Guys, I don't know if this is making some sense to you. This is just a simple math, guys. It's not so difficult. So if you are using the leverage of 1 to 500, leverage of 1 to 500, it means if you are, this is going to be 500,000. I said 500,000, 50,000. Okay, 50,000. So if you are using leverage 1 to 500, so it means you are going to deposit, how much is that, guys? It means you are going to deposit 1% of $50,000 as a deposit, as a collateral to keep the trade open. So that's going to be like 200 euro. 200 euro. So the higher your leverage, the lower your deposit. Okay, but the higher your leverage, the higher your risk. The higher your leverage, the higher your risk. But people don't know. The higher your leverage, the higher your risk. So that's why I advise people to not to use more than 1 to 500. So as you keep joining in this business, later on you keep hearing people say, do not over leverage. Do not over leverage. This is what they are talking about. When you keep hearing about people saying do not over leverage, this is what they are talking about. I hope this is clear, guys. I hope this is clear. So any question in the chat before we get away from this slide or before we move down, let me know in the chat, guys. Any question in the chat. Please let me know if you have any question in the chat. Okay, so in the absence of no question, we need to uh, proceed. Okay, good, good, good. That's a very good question there. Okay, thank you so much, Ebenezer. Somebody said, how does a higher leverage result to higher risk? Fine, I will explain that in one simple, how do I put it? In a very simple way. You see, brokers want you to take higher leverage. Okay, the more, uh, the higher your leverage, the higher your risk. What is the risk? The risk is that as you put in a trade, if a trade, let's say, okay, you have uh, you have taken 10 pips trade, right, as your stop loss. If you should lose these 10 pips, if these 10 pips should go against you, instead of brokers to take away $50, for example, okay, you will lose 100. The same way it gives you the opportunity to make more money, to drop small money, to deposit small money, to make big money. The same way it will deduct from your account. Okay, remember it only said you only need $50. You only need to deposit 50, for example. But in this case, it's saying you should deposit $100 to keep the trade open, right? Now, with this, if you use the leverage of 1 to 1,000, if a trade should go against you, you will lose more than this $100, okay, because of the leverage. And remember, someone who takes a leverage of 500, okay, the deposit for him is just 200. It's $200, okay, on 1% of 50,000. His deposit is 200. You with a leverage of 1 to 1,000, your deposit is $100. If trade should go against the two of you, you will lose more than this person. That is just a simple explanation. You will lose. That is how it is designed around leverage. You will lose more than this person. If a trade should go against the two of you, you will lose more than this person. You may eventually lose 225 or something, but you will lose more than this person. But people will not tell you, broker will not tell you. Brokers will not tell you. So that's why you find most of the US brokers and UK brokers, the maximum you can take, maximum leverage you can take is 1 to 200, 1 to 200, maximum 1 to 500 on the worst case. Like the broker I use, the maximum they take is 1 to 500. So that is just a simple explanation. Who asked the question? Ebenezer. Okay, Mr. Anderson. I hope this is clear, sir. So it's better to stay in between. Now, someone who takes uh someone who use leverage of 200, his leverage is smaller than 500. So his risk is lesser than someone who takes leverage of 500, but his deposit will be more than someone who takes leverage of 500. Yes, clear a little bit, but I don't expect to be much to be clear to you 100% right now. but the aim is just to make it a little bit clear to you. As you journey, you will understand it better. All right. So we have this opportunity because of our time. When we have this opportunity, I can see we explain this in another form that is going to be more clearer to you. But because of our time, it's almost 9:30, so I wouldn't want to, put in all our time on here. I feel like going on and on, but I need to consider your time as well. All right. Left for me, I can keep going to the next 3 to 4 hours. Left for me because I do this time to time, so it's already part of me. So I hope this is clear. But having brief little understanding about it is what really matters. But don't worry, you will get it clearer as we journey. I promise you, that 100% promise. So let's keep moving, guys. Now, margin calculation. How do they calculate this? Equity is your account balance. Okay, so your account balance is profit or minus, plus or minus profit. Okay, so it means what does this mean by profit or minus? If you have a trade opened, if you are making profit, as you make profit, you will be seeing it piling up. I don't think I have any trade open. I have it open on my live account, but I don't want to open my live account. I have some trade open on my live account, but I don't want to open it on my live account. But I will explain it better in a way that you can understand it. Let's say so sorry about that. I don't like to expose my live account, so you know some people will say maybe we're flaunting or something. No, and that is not the goal. Let's say, okay, let's say you have $1,000. Okay, you have $1,000. Out of this $1,000, you have taken a trade. If you have taken a trade, this $1,000 will still remain in there. But at the background, eh, some money is out of it. But you still see this $1,000 appearing. So now, if you have taken a trade, if that trade is in profit, this is where equity works. If that trade is in profit, let's say you are in profit of uh let's say profit of $30. $30. Okay, and the trade is still running. So your equity will be $1,030. So as you keep rolling in profit, as this one keeps growing to 31, this one will keep changing to 31. As this one keeps changing to 32, this one will keep changing to 32. All right, and vice versa. If you are in minus 32, you will see this one, you have a zero. Let's cancel this one. You have 9,007. Is this? Oh, sorry, I'm not good in math. Sorry, I'm so sorry about that. It's going to be, oh my God. It's going to be 906. What am I doing, sir? Sorry, I need to clear this off. So sorry, guys, I'm not good in math. So you have $1,000. As your profit increases, so does this $1,000 is going to increase. So if you are in minus of $30, then it means it's going to have 970. Okay, 970 as your equity. So that is what it means by plus or minus profit. I hope this is clear. Plus or minus profit. So your overall profit or loss on all the trades, if for example you have 5 trades open at a time, if all the 5 trades are opened at a time, so on all these 5 trades, if all of them are in profit, it's going to sum up all the profit together or loss. If there are some in loss and there are some in profit, the system is going to do plus and minus. So overall, if you are in profit, the profit will be added to this. Then you see this one, the equity, rising in profit. Okay? And if the overall outcome of all the trades, all the current trades is in minus, which means you are losing on all the trades, plus and minus on all the trades, then you will see this one decreasing. This is very, very simple, guys. Just have this explanation on your head. Very soon you will understand it. All right, very, very soon. It's not so hard at all. Just have this explanation. The moment you look at it, you will understand this explanation I've just made. It's not so difficult. I know what I'm talking about. All right. So free margin. Free margin equals equity. Maybe I should just, okay, let me see if I can take a trade on demo. I think that will be better, but let me explain this. Let's see if I can take a trade on demo, then I can explain that under 1 minute on demo account. So free margin equals equity margin. All right. So what is free margin? Free margin is the amount that is available for you to take the next trade. Free margin is the amount that is available for you to take the next trade. So out of 1,000, if your 1,000 is decreasing, you have taken a trade, okay, and underneath, remember, let's say brokers are taking $50 away. So underneath, that 950 is the amount that is available, which is the free margin. It is the amount that is available to take the next trade. So that is known as the free margin. I hope you understand that. So just the same way its name sounds, free margin, which is the money that is available, that is free to take the next trade. So margin level equals to equity divided by margin multiplied by 100. So let's go on the chart. Let me quickly open the chart. Then I can take some trade, just one trade. I don't think I have any trade running on the demo account. So I can just explain that. In a few seconds. Sorry guys, trying to see if I can. Oops. Unfortunately, I don't have. Just hold on. Let me see if I can. I want you guys to feel this. If I can. Just exercise 1 minute patience, guys. Okay, guys, so sorry about that. Trying to put up something for you guys. I'm just putting a massive trade, just to put on a trade test for you guys so I can try to explain that to you. Just few seconds. Okay, so I hope you can see right now, guys. I hope you can see my chart. Now look at the balance. This is the balance I was having in the trade. I think I have some trade on demo. I have 2 trades on demo. So look at this. This is the balance as at the time the trade was opened. Guys, I hope you guys are following. This is the balance. Now this is the equity. Now, can you see the equity is changing, guys? You can see the equity is changing in value. You can see. Now, once you just take a quick look. Look at the equity. Look at the balance. Once you take this $46 away from this is what you get. Okay? Current floating profit or loss minus equity equals balance. All right? I hope you guys are following. Please let me know in the chat if you are following. So let's talk about free margin. Look at free margin. What does this mean? What does that mean? Free margin equals equity margin. Okay? Free margin, this is free margin, is equals this. This is something you don't really need to bother yourself about, but it's just important we talk about it. Somebody said one more. Equity. This is your current balance. This is the balance I had as at the time I opened the trade. Now, this is equity. You can see the equity is changing. All right. Now, how do we have this change time to time? This is the floating profit or minus. If I have this in minus, okay, now I have it in profit, $47. If you take this amount away from this 1,488, it's going to give you 1,441. All right. So if I have minus right here, so this one will decrease. I hope this is clear. This one will decrease. So the free margin is, I hope that is clear before I proceed to free margin. So free margin equals equity. So this is the number of the trade. Once you do your plus and minus based on margin level, it will give you the free margin. Sorry, the margin rather. Now margin level. Margin level. Equity multiplied by margin times 100. Equity, which is this. I hope you guys can see my mouse. Equity multiplied by, divided by margin multiplied by 100. Equity divided by margin multiplied by 100, it gives you this. When you divide this by this, multiply it by 100, then it will give you 1,418. So time to time, you see this keep changing every time. So this margin is calculated automatically through system. So you have the number, you have the margin available right there. So as you keep taking more trades, so does this one is going to increase. So this is based on the leverage. All right. This is based on the leverage of the account. The leverage you have on that particular account. So if you have the leverage of 1 to 1,000, then you will see this go lower. You will see this go lower than this. I hope you understand. So you can see the reason why I said you can lose more when you have higher leverage. So the moment this one will keep counting from this 100 to 0. So I think once it gets to like 10 or 15, you won't be able to take any more trade. So it means you already have much trade on it. So you do not have any margin anymore. Okay, which means you don't have a deposit anymore. It means all the balance you have has been placed on your current trades. I hope this is clear, sir and ma. But right here, believe me, you don't need to bother yourself with all this. You don't need to bother yourself, but it's just important you know it. So if that explanation is clear in the chat, please let me know. Type in clear, clear, clear in the chat. Type in clear in the chat. Let me know if that is clear enough. I honestly don't expect you guys to understand everything in one class. No. Yeah, and if everybody says you can understand everything in one class, then you have to run away. So guys, let's keep moving. I want to hear from you guys. If that is clear enough to an extent, please type in something in the chat. Of course, you will. Most certainly. Of course. So let's keep moving. So the next thing I want to talk about right now is the I have this for you guys, but unfortunately I couldn't find the file. So how to use MetaTrader 4 mobile platform. All the way today I've been trying to search for the file on my Google Drive archive, but I couldn't find it. Okay, I have two videos for this out that will explain to you, teach you how to use the mobile MetaTrader 4. For those of you who are asking, can we trade with our mobile? Of course you can trade, but you cannot learn through mobile. But the video I have explain every details about how to use the mobile, but unfortunately I couldn't find the video, so I'll have to do another one probably during the course of the week or something. So once that is ready, but my fear is that, okay, but let's see, once that is ready, I'll put it on YouTube. I can alert you guys when you go there and watch. All right, will that be fine with you guys? So now, but for now, I don't expect you to start trading on your mobile platform. Go on your laptop, keep learning and keep doing everything you want to do on your laptop. Then from there you can proceed. So now let's go and talk about the king strategy. The king strategy. This is the strategy. I call this strategy master key to me. I call this strategy master key because this strategy, when it comes to trading, anything that has to do with trading, this strategy opens it all. Yes, I know what I'm talking about. I'm a price action trader and I'm a system trader. So this is a system trader. System trader is when you see one thing and one thing happen that leads to one thing, that you take your trade. Okay, which means you have to follow some set of rules. That is what system trading is all about. All right. To the glory of God, I am the creator of this strategy, and this is very, very, it has been working, and I've been using this for over 3 years. Okay, and I've optimized it. I did another optimization earlier this year, and I've optimized it about 4 times right now. So it's becoming better and better. So let's talk about this strategy. Let's talk about this strategy, guys. I think I need to go on the MetaTrader 4 to explain this. So you want to jot everything down about this, guys. I have a video on this. Don't worry. I have a video on this. I'm just going to be brief on this strategy, but I have a video. We have tons of videos on our YouTube channel that explains everything about this strategy and how you can use it better. So once you watch the strategy, you are going to really, really understand everything. All right. So don't worry about that. So I think Maybe I can look for the video and give it to you guys as I keep explaining. But once you go on our YouTube channel, just type King Strategy. You will see about 3 videos there. Okay, then you'll be able to know which one to take. Trust me, all the videos will enlighten you more about this strategy. All right, but it is important for me to just share it with you right on this spot. So let's go back on the trading platform. So guys, you want to write every bit of information I want to give it to you right now. The first thing we want to do is that, let me quickly explain something. Now, let me bring an indicator out. I want to bring moving average. Okay, for those of you who don't know, we call it moving average. This is moving average. Okay, this is moving average. Guys, look at, there are some set of rules this has to follow. Whenever, this is 120 moving average. Whenever you see this line, this moving average, above all these candles, we call these candles. Okay, whenever you see this moving average above it, it means price is going down. All right, it means price is going down. And whenever you see price going above it, okay, whenever I see candles traveling above it, it means price is going up. Now imagine if you have entered a trade right here and exit the trade around here, a very good profit of 316 pips. Okay, this is how we roll. So now, for those of you who are totally new, I do not expect you to understand this in the first place. I'm telling you the truth. This will be like a magic to you. But just keep assimilating, just keep following, all right? The first thing you want to do is that you want to bring in an indicator. Number one indicator we want to use is 120 moving average. Somebody said, I can't hear. Everybody, please confirm. Everybody, please confirm. Can you hear me? Is my voice audible enough? Please, please, please. Our time is running fast, guys. We are running out of time. I can, yes. It's only you guys. I can hear, I can hear. Thank you so much, everybody. I appreciate you guys. So now the first thing you want to do, the first indicator you want to bring out, guys, keep noting this down. The first indicator you want to bring out is 120 exponential moving average. Okay, so how do you get the moving average? Go to this cross. Okay, you see where it says indicator. All right, click on it. Come under trend. Okay, under trend, click on moving average. You may want to write these steps down, please. Okay, the first indicator is 120 exponential moving average. 120 exponential moving average. So click on this cross, which is indicator, then go to moving average. Once you click it, you see something like this. A dialog box comes out. Inside the period, you type in 120. All right, you type in 120. You type in 120. Then under MA method, change to exponential. Change to exponential. All right, as you change to exponential, select any color of your choice. Then after that, click OK. Okay, once you click OK, this is something you have. So I use red in my case. So the second indicator I want to bring out is exponential moving average 12. exponential moving average 12. So you do the same thing, go to trend, go to moving average, click on it. This time you want to use 12, all right, not 120 anymore, 12. So with 12, this will also be exponential. So I want to use another color to represent that so that it won't get mixed up. So I want to select blue. So after I have that, I click OK. All right, you can see the red is 120. This blue is 12. So let's bring out another exponential moving average. So this time we are using exponential moving average 5. 5. 5. So the period is where you're going to type in 5. MA method, you make it exponential. So here you make sure you change the color to something else, okay, so that it won't get mixed up with others. So now let's select yellow. Okay, I think the yellow is too blend. Let's use white. Where's white? Okay, I think this is okay. So now we have three exponential moving average right in the box. So the next one we want to bring out is RSI, Relative Strength Index. Relative Strength Index. I'm going to move faster with these guys. You are still going to watch the video that will explain this to you in detail. So I just quickly want to explain this under a few minutes because of our time. So now we want to bring out RSI, Relative Strength Index. So these are the instruments you will use to forecast the movement of the market that will tell you when to buy and when to sell. So go to the same thing. So this time you don't go to trend, you go to oscillator. All right, oscillator right here, locate Relative Strength Index. Look at. So as you click on it, this is what we have. All right, this is what we have. Right here, with the period, we want to use period 21 for Relative Strength Index, period 21. Leave this one the way it is. You only want to change the period to 21. All right. Now, under level, by default, this is what you have, 30 and 70. Okay, so you want to add another one. Once you click add, type in 50. The 50 means you are dividing 100 into 2. It means you are dividing 100 into 2. I hope this is clear, guys. This is just the thickness, okay? So after that, click on OK. As you click on OK, look at, this is the RSI. All right, this is the RSI. So now, let's explain this, guys, so that it won't get too complicated to you. We still have one more indicator to bring out. Let's bring it out. You go to stochastic, oscillator, you select stochastic. Select stochastic. Here, you only type in 1433. This is just the only thing you need right here, 1433. Then once you have 1433, remember 1433, then click OK. By default, it's not going to be 1433. So you have to type in 1433. So as you type it there, this is the strategy we use. This strategy works for everything. It works for stocks. It works for crypto. It works for binary. It works for forex. It works for shares. It works for anything that has charts. But you need to understand it properly. I hope this is clear, guys. So this is it. Now, guys, this is how it works. Whenever you see this red line, which is 120 moving average, above candles, above all these candles, it means price is going down. So we want to look for a sell. So when do we look for a sell? We want to look for a sell when the white line crosses from the upside to the downside. And right now you can see A cross is about to happen from the upside to the downside. So after the close of this candle, there may be a sell entry for us. All right. I hope this is clear. So this is a sell. Whenever you see candle traveling above this red line, all right. So after the close of the candle, you enter your sell trade. You enter your sell trade, then your stop loss is going to be above. I hope you understand. But before you take the trade after the close of this candle, you want to check RSI. Where is the position of RSI? If RSI, if this blue line is below the middle line, which is the 50, then it's telling you and confirming to you that price is dropping. All right? It's telling you that price is dropping. I hope this is clear, guys. I know I'm too fast with this because I'm just trying to touch on it. We have videos that explains this in details. Over 1 hour video that explains only this in details. So you are covered, all right? So I'm just going to run quickly on it so we can move up to the next chart as we're about to round up the session. So for a sell, I haven't talked about stochastic, but in the video you will learn more about the stochastic, all right? You will learn more. So for a buy, want to look for a buy whenever we see the cross of the 5 and 12 moving average, which is the cross between the white and blue line from the downside to the upside. Whenever it crosses to the upside like this, that is where we want to buy. Okay, and before that, you want to be sure that candles are above the red line, because the red line tells us the overall direction of the market. So, and as you can see, once price crosses to the upside, market went up. Okay, it crosses here too, but it does not go far before it reverses. So nothing is 100% in Forex. I hope this is clear to you guys. So this is how to bring out the indicator right here. So as you are watching the video on this strategy, pay attention to every details on how to put in pay attention to every details about the indicator. So you're going to pause it, write something down, pause it, write something down. So and rewatch the strategy twice so that you can understand. All right. I hope this is clear to you guys. Because of our time, I'm going to stop here on this strategy. Then let's move to the next slide. So somebody asked me a question that how can I can I become a day trader or something? I said, okay, don't worry, try to be in class today. I don't know if the person is here. He was asking me today. So this is where you're going to belong. Now we have types of forex trader. We have 4 kinds of forex trader. Number 1, we have scalper. Okay, scalper are the people who come into the market that want to trade between 1 minute to 5 minutes. So scalper targets between 5 pips and 10 pips and get out of the market. So these are the people that comes into the market sharply and leave sharply. So, but for them to be able to make money with this type of trader, you have to take many trades. All right. So a scalper targets between 5 to 10 pips per trade. So the next one I have is swing trader. I said swing trader. Day trader first before swing trader. So day trader targets between 20 to 40 pips per trade. Okay, and their trade duration is within a day, which means once you open a trade in a day, in the morning, you are most likely to get to your take profits before the end of the day. And once you open a trade in the evening, probably before the end of the following day, you are out in profit or you are out in loss. So Day trader target between 20 to 40 pips. All right. And swing trader target between 50 to 150 pips. So the duration of their trade may last for several days and or weeks. So I'm a day trader and I'm a swing trader. I day trade and I swing trade. I don't scalp. Okay, I day trade and I swing trade. So now, position traders. These are the people that target long term trades. These are the people that target long term trades. Position trader. Once they take a trade, they can wait for up to 3 months, 5 months, 6 months before they get out in profits. So position trader target between 500 pips to 1,000 pips. Position trader may wait for 1 month, 3 weeks, 4 weeks, 3 months, 5 months, depending on how long the trade is going to go, guys. So this is in this category. I cannot say this is where you should belong. As you join in this business, you will know which one of it you want to where you want to belong. Okay, I have actually tried to talk between a scalper, day trader, and swing trader, but I feel scalper is too stressful, too stressful. Okay, when I'm too busy, I swing trade. When I know that within this very month I'm going to be too busy, I swing trade. But when I have the time, I day trade. All right, so I am a day trader and also a swing trader. So guys, nobody's going to tell you where you are going to belong here, where you are going to belong to. So you'll be able to define that as a journey. Yes, it does not matter. You can use it what you really understand, but I've just shared this strategy with you. All right. So go on our YouTube channel, look for the King Strategy. You will see good video on how to use the strategy better and better. All right. And believe me, you're going to become profitable with this. All right. So I hope this is clear, guys. So guys, so pushing further, we have just come into the end of the 3 days foundation course. Okay, so all what you've learned in the last 3 days up to this moment, guys, is just introduction to forex trading. You wouldn't imagine that. All what you have learned between day one to this moment is just an introduction to forex. Okay, which means you have learned the business of forex basis, currency pair, contract size, and how to profit from the move. So all what you've learned is just lesson one. So we still have lesson two, which is mastering technical analysis. This is the master house. I call it the master house. Okay, we still have mastering technical analysis, the principle of technical analysis, how candlestick pattern are formed. All the candlestick pattern you were looking at, how they were formed. We'll be teaching you everything about that. How the candlestick pattern are forming, and how you can use the moving average and all of that. How you can use it to create a strategy, how to read it better, how to identify a trend if the market is going up or is going down, how to use support resistance, how to master moving average, how to use uh MetaTrader 4 trading platform in depth. So all what the link I have shared with you guys is just the basic knowledge. So we still have in-depth video for this. Okay, how to use it, how we went deep in this video on how to use every bit of click, every bit of information you can find on that MetaTrader 4. Okay, so this is where you have it. On lesson 3, we talk about harmonic pattern plus the king strategy, how you can use them together to make money and all of that. Lesson 4, position size and trade management. Okay, this is the pivot point of success. So we teach you in depth about this position sizing, money management, risk management. This is where it lies. So we show you everything the same way the what is it called? The same way the hedge funds are using it, the same way the professionals are using it, the same way we are using it, and we make sure you understand. We teach you to understand every bit of information. Okay, and more to that, psychology of winning, how to control your fear. Okay, if you miss a trade, how to control it, how to be patient, how to allow winning trade run, accepting loss, how to use low risk. You see, we will teach you in a way that under money management, I have said it earlier on, we will teach you in a way that even if you lose that account, brother, sister, if you lose that account, you yourself, you will know that, I am the cause of this. You yourself, you will say to yourself that I am the cause of it. So that is the way we teach. I am not saying it's not possible for you to blow an account. It is very, very possible. But if you follow what we are going to teach you in this advanced class, you are you will be grateful, and what you will learn, you will know yourself that if you blow any account, you are the cause of it. All right, and we'll teach you in a way that you'll be able to, once you are undergoing losing streak, you can take we will teach you in a way that you can take a rest and bounce back in a better way. All right, we teach more than what you are looking at right here, far, far, far more than what you are looking at right here. So lesson 6, how to develop a trading plan. All right, everything. So I think something is missing up right here. So and much more. We think in depth about these guys. The curriculum is far wider than this. All right, it's far, far, far wider than this. So guys, I'm so happy to have you guys here today. I'm so happy to have you guys here today. But let me be sincere with you. If you really gain some value in this class, please let me know in the chat. If you gain any value in these 3 days, type in value in the chat. Type in value in the chat, guys. Type in value in the chat. I want to know if you really gain some value. Type in value in the chat. Type in value in the chat. Type in value. Thank you so much, Ebenezer. All right, Isaac, thank you. So, are these two people, are these the people that really gain value? I want to know those who really gain value with these guys. Thank you so much, everybody. Thank you so much. So, guys, judging from what you've learned, I can confirm to you that all what you've learned within these 3 days is just like having 1% of knowledge. Having 1%. So, all what we packed within the advanced training as the 99% and what you need to succeed. And I keep telling people, if you follow what you are going to teach you, believe me, you are close to become a successful trader in a very short time. All right. So now the benefit of joining our advanced class. Our advanced class is 6 weeks course duration. 6 weeks. Okay. Previously it was 4 weeks, but now we've added more curriculum to it. So now it's 6 weeks. Okay, because we feel advanced traders needs more. So it was previously 4 months, which was 1 month. So now we've added 2 weeks to it, making it 6 weeks. So the course is going to be 3 days in a week. The reason why we choose 3 days is that so that you can have the remaining of the week to practice what you are learning. Okay, so that you can be able to move along before we jump into the next week. All right, the following week rather. So it's going to be 6 weeks intensive lecture via Zoom, the same way we've done this. So after the 6 weeks, after you've completed your 6 weeks lecture, we will have 1 month close mentorship to gain mastery. So during this 1 month close mentorship, we will monitor you to ensure you are doing it right. We give you close marking to ensure you are doing it right. So that is what mentorship is all about. We monitor you within this 1 month to ensure you're following it right. So after that 1 month, you still have lifetime support. So if you have any challenge, you come to us and we do it for you based on trading. All right. If you still have any challenge, we will be there for you. So we become one big happy family. In fact, I must say I have good relationship with 99% of our advanced students. 99% of them, I have good relationship with all of them. So very soon you're going to start seeing a lot of testimonies on our group. All right. So after that, we'll be teaching you 4 proven strategies. Apart from the king strategy, we still have 4 other strategies to teach you. So within these 4 strategies, there is no way you will not see one that you will like. No way. And we make sure we teach you in a way that you understand and you'll be able to trade with that strategy profitably. So, and after that, after you finish your studies, we are going to give you 1 month free trading alert of either harmonic scanner or the king strategy. 1 month free trading alert. All right. So that is going to be another advantage. And additionally, you'll be having free harmonic scanner indicator because we are going to teach you harmonic scanner strategy. So we will give you the basic indicator that you can use to trade. All right. So the indicator alone in the market, the basic indicator alone worth $76. Worth $76. The indicator alone in the market worth $76. So we are giving you that for free. So that is that for the Forex part of it. It does not stop there, guys. In fact, we have additional opportunity for you, which is free additional benefits. If you are taking the advanced course, we will be giving you the opportunity to learn binary. Okay, if you want to learn this binary alone, we are currently giving $25 for people to subscribe to this. But trust me, very soon this is going to go back to $70. Yes, so this course is worth $70. This course alone is worth $70. But we are currently giving it to people on the group for $25. But I know a lot of people are taking advantage, and while some are sleeping on it, I know by the time it shoots back to $70, that is where we are taking it to, because we know the value of what we are giving. So the moment it shoots back to $70, a lot of people will regret it. But we won't tell this out to anybody. Okay, it is our in-house decision. So if you are taking the benefit, we will be giving you the access to the 7 days binary options course video to learn everything about binary, everything how we are trading binary to make daily profits. Today alone on binary, we made 8.4% profit on binary today alone. You guys can see that on the group. All right, you can see that on the group, and you can see people responding to that, those who are in the binary group. All right, we have a separate group for binary. So if you take this course, you will be added to the binary group. All right, you will also have access to the binary live trading session till free of charge till the end of March this month. Okay, you will also be introduced to our binary broker. So this broker gives you 200% first deposit bonus. So if you are depositing, they will give you 200% bonus. So this bonus you can use it to trade and make money. I hope this is clear, guys. So binary is a way that you learn this and you can start making money the next or 4th day. In the next 5 days, you can start making money with binary. So while you are learning Forex, you can continue making money with this. Just learn go through the videos, learn the basic of how to trade. Then join our live trading section. we analyze the trade and we will tell you the same way we are doing it on the Zoom. That's how we do it every day. We only tell you, we analyze it. You see the way we analyze it. We tell you, now let's buy. Then everybody clicks buy. We buy and make profit together. If we lose, everybody loses together. So with this, guys, if you subscribe to this advanced class, you will have all these things free of charge. You have it free, and on top of all, the master of all, you can join. You can put in some money in your binary live trade account. Join us every morning while you are still watching your binary video. You only watch the important part of it. Then join us every morning to make money, make your 5%. So while you are learning forex, you are making money. While you are learning forex, you are making money. So you can learn binary after the 7 days, because the video is designed to be taken once a day. So it's less than 2 hours. Each class for each day is less than 2 hours. So the video, after the 7 days video, you will be a good binary trader. What you just need is to practice. Just practice, and perfect it. That is all. So while you are practicing this, you can just join us on our live trading section, trade with us, and keep making the profit while you are learning. So that is the joy of it. And on top of that, we have close relationship and every other thing, guys. So if you are ready to take this course is starting in March. Okay, March 15, which is next week Monday. All right, next week Monday, and the registration closes on the 30th. For anyone who wish to register, registration closes on Saturday. So what is the amount for this course? This course is $150. Okay, it's $150, but we have a discount price for those who want to act now, and for 5 people alone. Just for 5 people, anyone who wish to take this course, the first 5 people is allowed to pay $100, which is 45,000 naira. Okay, the first 5 people that want to come in for this course. So if you are paying now, if you are paying between now and tomorrow night, okay, and provided we only have the 5 people, sorry, the 5 slots has not been taken, so you can pay just $100. So if the 5 slots is taken, the cost goes back to $150. All right. So if you are willing to take this, chat with the admin right after this class, and then let's see the first 5 people who are going to make use of the discount price. Okay, believe me, my word is my bond. After the 5 people after we have the 5 people at the rate of $100, that is all. Okay, anybody that wants to come in they are gonna pay $150. So what we are giving, we know what we are giving. We know what we are giving. Okay, and I'm sure, I just really want people to come in, the first 5 people to come in first, before we start putting this testimony of our past class. Okay, for our past advanced students. So once you listen to this series of testimony from there, I'm sure that it will jar a lot of people. But by then the price would have gone to $150. So nobody will now come and say, okay, please, I can still pay 100. No, we know what we are given, and we are not doing this for money. I will keep saying it. You will listen to some of the students that really commented on that we are not keen about the money you are paying to us. We are so concerned about impacting life. Okay, but when people take things free of charge, they don't take it serious. But the moment you commit your resources, your energy, and one thing or the other, that is why when you get serious with this. Okay, so the binary cost alone is more than enough for you to grab this opportunity, even if you don't want to. All right, and imagine the harmonic scanner that is worth $76. and several things like that, guys. It does not stop there. So along the line, we give you a lot of ebooks that will help you and couple with all what we are going to teach you. All right. So we know what we are giving you is this course. When we asked a few of our students, in fact, we were amazed when a lot of them were saying it's over $500. You will hear all this uh, when you listen to all the testimonies. A lot of them were saying, more than 12 of them were saying it's well over $500. So, but we understand a lot of people cannot afford this, but the goal is just to impact life. That is just, it's not all about the money. I keep saying no amount of money we will charge for anything that we cannot get it on the market. To the glory of God, today alone, I have made a good percentage of profit today alone. So that is it, guys. If you're really ready to take this course, let's chat right after this class. The admin is, this is the admin. Chat at the Kingmaker. Chat at the Kingmaker on the Telegram. Chat with the Kingmaker. Binary. Okay, good question. What is the difference between the forex and binary? Binary is time-based trading. Forex is price-based. Okay, price-based is that you are buying from this price, you are closing from this price. But binary, if you want to trade in 2 minutes, you trade in 2 minutes. After 2 minutes, you know what your result is. If you are losing, you are losing. If you are winning, you are winning. All right. So that is why we are able to make reasonable profits within a short period of time. Under 1 hour, we make 5 to 6% and above, and we get out of the market. Okay, that's how we do it every day. Now, quickly, let me blow your mind, guys, before we call it a day. Spare me 1 minute just to blow your mind, guys. Just to blow your mind, guys. Just 1 minute. Now on binary, this is how we compound. This is how we compound. Let's say you have $500 with binary. You have $500 in your trading account. On $5, 5% daily interest. You can see daily interest, 5%. Let's say 1 month. We have 20 days, 20 working days in 1 month, because Saturday and Sunday is not part of it. So reinvestment 100, weekend no. So imagine $500 as your starting capital, 5% daily interest in 1 month. Look at what it's going to give you. This is what you're going to have as your profit. Okay, look at, in 20 days, this is what you're going to get as your profit, over $800. This is about 165% profit. So if on a worst case, because there are days that we will lose as well, if on a worst case you get in $600 as your profit, is that a good business or a bad business? So doing this for 3 months non-stop without withdrawing, look at what you are going to get, 8,000 plus. So guys, even you can start with 200. You can start with $200. You can start with $200. Look at what you get in 3 months. Okay, is there any look around, which business can give you this? Can bank give you this, guys? So this is how we compound our money every day with 5%. And there are times we have more than 5% profit, and there are times we have less than 5%. So to balance it up, we base on 5% every day. So guys, that is how binary works. All right, that is how binary works. So that is how we make money. So once you subscribe to this, everything will be revealed to you. So we'll be there to guide you to do the necessary thing, and you start making money. So chat with the admin. So I believe for you to be in this class, you are on our Telegram group, because we decided not to open the link to those who are on WhatsApp. All right. So I believe you guys are on the Telegram group. So chat with the admin on Telegram. So let's talk. So if you want to make payments, the payment is for $100 is just 45,000 naira, just 45,000 naira. Okay, because we rate at 450 per dollar. All right, and remember, we only need 5 people for the discount. Okay, once the 5 slot is taken for the discount, price goes back to $100. Okay, all right. So thank you so much, guys, for having me. I wish you guys bunch of success in your trading career. Okay, and I hope to see you at the top and not from the top. Thank you so much. Thank you very much. I appreciate you for being here. This shows that you're ready to succeed, and I'm looking forward to work with you on this journey to take you to where you desire to be in profit. So thank you so much. I wish you success, and as I wish myself. So God bless you and God bless me and God bless everybody. So I still remain your host. My name remains Abolade Adekola, the Kingmaker. Thank you so much, and see more of you on the group. Bye bye for now. And don't forget the 3 days, uh, the replay of the 3 days class will be posted on the group tomorrow. All right. So look forward to it. Thank you so much, and